What is up, guys? It's Friday, November 22nd. We ended up taking a losing day today. I took 3 trades, and honestly, the first one was an okay trade. I was totally fine with that one. The second trade was an incorrect trade, and then the third one was kind of really a revenge trade because of what happened. But let's get into what happened, right? So we start out always on the 4-hour time frame, just to understand the overall structure and where the draw on liquidity will be. We have been in this kind of sloppy uptrend, I would call it. You can see we created this swing low right there. So I really wanted to see how this candle was going to end up forming, if we were going to end up going higher. And if we did, I was looking for it to hit at least this high from Thursday, which unfortunately we didn't get. So we're still within the range of yesterday's action. But on the 1-hour time frame, the one thing that I was watching that was super key was this 1-hour imbalance right there. If we got a close below that, I would consider going short, targeting the lower end right here, this draw on liquidity at 477.25. Now remember that, because that's where the second trade comes in, and I didn't pay attention to that. But on the 15-minute time frame, I saw that we had this 15-minute imbalance right here, and that if we got a close above that, then I would consider going long, looking for a long entry. And that's where kind of, I guess my first trade was also not that great, because of the fact that you see we have another 15-minute imbalance right here, and really I should have waited for price to retrace down into it and then find some kind of support. But I'll explain more about that after. So the market opens up, and the first thing that we note in the market is that it starts to pump on higher. Okay, great. I'm looking for long entries. This is looking good to have this bullish structure get created. So price comes up, comes down. I'm waiting to see where 10 o'clock opens, if it's going to open above the levels that I wanted to see here on this 15-minute time frame, right? I wanted to see a 15-minute candle close above, which we got at 9:45. So overall, I'm looking for the 10 o'clock candle to open, manipulate lower, and then go higher. Now, I didn't think it was going to be this much of a manipulation down lower, but regardless, the trade that I took itself was the fact that we came down, we created this 1-minute imbalance here. Price comes on up, 10 o'clock hits, comes down into this 1-minute imbalance right there. So the reaction out of that was kind of my trade entry. So I entered, and then the candle closed within it. Totally cool. Price comes on up. I'm in profit for a bit here. I'm thinking, all right, now we're coming up to the 10 o'clock open. We're going to be going higher, looking good. But then we get a 1-minute candle close below that. Now, I considered closing out my trade there, but I've been hesitant to do that because sometimes it does that and then continues to move on higher, especially because it was doing that here. You can see that we closed below this 1-minute imbalance right here, and then we started to come up higher, but then traded lower. We closed above this one and we traded lower. So the price action was really all over the place this morning, and a lot of people lost. But that's no excuse, right? I should have waited, honestly, for a retracement down into this 15-minute fair value gap, and then look for a long entry to go higher. Because if I did that, I would not have taken this trade, and I would have taken this one that I have marked out here in the big green, where my first target would have been right up here, and I would have hit a 1 to 2 automatically. And then I would have had, my runners up into that draw on liquidity. But that's neither here or there, right? So that was the golden opportunity, right? Because that was that nice retracement down into that 15-minute fair value gap, and then, having some kind of level of support in here, and then creating this inverse imbalance. But we'll get there. Price stops me out. Okay, great. I'm watching what happens, and I mark out here that if we get a 5-minute candle close below this, and also this 15-minute FEG, or this imbalance, that I would look for a short trade. And here at, what was it? Was it beforehand? At 10:30-ish, or 10:35, right? We get that candle closure below. I entered in preemptively. That was wrong. I really should have waited for that 1-hour imbalance to get invalidated, and it didn't. Unfortunately, it did not. Okay, I entered in on the retracement into this 1-minute fair value gap right here, and I had my stop above that swing high right there. and price chops around it, and then boom, just shoots right on up. The problem was that I did not focus on the 1 hour. I should have focused on the higher time frame. The 4 hour was still kind of neutral, but the 1 hour was bullish. And for the most part, the 15-minute was still bullish, especially because we had closed above this 15-minute imbalance there too. So the trade I should have taken was the fact that we came down lower. We also swept liquidity, I believe. We did not. Oh yeah, we did. We swept this internal low right there. We almost came down to this one, or we may have. Yeah, we did a little bit. But we get that sweep of liquidity. We create this imbalance right here. Price comes on up. This candle closes above it, invalidating bearish action. And if I really wanted to wait, I could have waited for this one right here. Put my stop below this swing low because this candle invalidates that one right there. And I could have taken a long entry targeting the high of day, which I don't believe I would have gotten stopped out. Let's see. If I entered in on this one and I put my stop below that low and I target the high of day as my first take profit, yeah, I would have gotten stopped out right there. Okay, very unfortunate. And that's why I always say internal range liquidity is always a target. Always look for the external range. So this really was the key trade to have taken, right? This imbalance gets invalidated, you enter in long, and then hold through until you get that high of day get created. It gets put in, tapped in, and starts to dwindle. Your runners would not have gotten stopped, and you would have ended the day around here if you would have closed at 4 o'clock, or really if you held until the very end, right? This was the trade. This was the trade, an all-day trade, which would have sucked mentally, especially on a Friday. Being in profit, coming down and having it chop around in this area and then going higher, man, that must be exhausting. And that is obviously not the kind of environment that I want to trade in. But anyway, price moves on higher, and I start to think, okay, now we're going to start get that move on up. As soon as I see some kind of invalidation of a bearish fair value gap right there, that held once, twice, and then boom, we invalidate it. So I market order in right there, put my stop below that low, and that quickly gets tapped out. So it was 0-3 for Coininia today, and that's okay. I misread this one. I should not have taken a third trade. As you guys know, 3 is one too many of my risk management, but I had lower risk on these, so it was okay. I amounted to pretty much the same dollar amount wise, but regardless, I should not have taken this one, and I definitely should not have gone short. I don't know why I went short. I guess I was just too focused on the 5-minute and the 15-minute. But if you look on the 1 hour, if we zoom out to that 1 hour, that imbalance is still holding. Small, but still holding. We don't have a body closure in it at all. We bounced out of it. We tested it this morning, and now we're moving out of it. Now I do believe we're going to end up hitting this overnight, potentially. So we'll see. Hopefully you guys ended up green. It was definitely a tough day today, and I will see you all next week, guys. Peace.